Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this session I'm going to show you how we use the Master Trader method to short high probability setups regardless of what the broader markets are doing at the time. We have what we use a Techno-Fundamental approach where we look at the broader markets using technical analysis, the sectors, what the market internals doing, inter-market analysis, the relationship between certain sectors and interest rates, and we look at transports, what are the banks doing, and we put all that together to come up with a bias. And that applies to the broader markets, sectors of interest, and individual stocks that we want to trade. This is a screenshot from my partner Greg Capra. He does a very detailed market review and this intermarket analysis in our weekend letters for the advisory swing and options traders. And this just shows you, sorted from the highest to the lowest here. You can notice last week that technology has been on fire. Technology, software, semiconductors, even the S&P 500 looks great. Look at all these green check marks, which we review in detail in the letter. But under the hood here, there's so many other sectors that are in bearish downtrends, no patterns, nothing to do. So the broader market strength actually can mask what is going on under the hood, as we say. This is the SMH, which are the semiconductor ETF. Look what happened last week on the heels of NVIDIA's positive earnings. AI stocks rocked here, technology, semiconductor software, the FAANG and AI-related FAANG stocks. So this is a climactic sell setup now. Look at the volume. The big money has been flowing into this. Even the broader markets are in an uptrend. It was a pullback and reversal above the 20, above the 50, above the 200. Even that looks great. But stocks and sectors and anything you want to trade, this is what we teach, that these are the only possible movements that a stock can make. Uptrend, downtrend, sideways trends, and then we have what we call the transitional phases that look like this, that then are the transition phases from these three. So regardless of what the broader markets are doing, as you know, charts are made up of the sum total market participants of real money. So it's supply and demand. So this is reality. This is why we say charts work. Regardless of what the broader market's doing, we find sectors and stocks and ETFs that we can trade that fit into one of those categories. These are just 9 pictures that are all bullish setups that we use to trade stocks and options. And any one of those pictures you can place in any one of these. So our approach starts with a compelling pattern, and then we see where is it in connection with the overall trends, support and resistance, multiple time frames, relative strength or weakness. We combine those other concepts before we put on a trade. I'm going to show you a couple trades that we did last week that we gave the advisory swing and options trader. So keep that strength in mind of the semiconductor, the NASDAQ, XLK is technology, and even the S&P 500. And look at these beautiful short setups that we profited handsomely from last week. Every one of our daily charts just have this very simple red and green candlesticks, color-coded volume, and we use 3 moving averages on the daily chart. The blue is the 20, green 50, and the red is the 200, which is you can't see on this chart. So a downtrend this is a transitional phase from a downtrend to a sideways trend, and then back to a downtrend. And the green is the intermediate term trend is definitely down. So this was a breakout failure. This was a closing breakdown. This was an attempt to bounce, which failed. And this now is a closing breakdown after this power green bar was ignored. Every one of our trades, another concept is the price void. So for shorts, it means look to the left, and there has to be insignificant support or congestion to the left to allow that compelling setup to move lower into the void. So this obviously meets that. There's nothing here to the left. This is the prior major pivot low, which you can see what it bounced off of. This is the format of a closing trade that all subscribers have access to in the members area. We give the date, the stock symbol, the stock or option strategy, the technical setup as always. So you can see here it's a breakdown, and we also put in parentheses here. This would be the concept of relative strength weakness also. We notice that the competitors, AutoZone and O'Reilly, competitors of advanced auto parts here, have been weak. Earnings were coming up, so we shorted the stock as a breakdown here. We covered into weakness, and we made a nice just 3-day swing trade when the NASDAQ and semiconductors are in rocking bull fashion. This was a high probability short breakdown that we traded. Nice little 3-day swing profit. A couple others here. Again, we use moving averages just to speed up the analysis, but notice here the declining 50, the declining 20. Every one of these were attempts to move higher, and they failed. This particular setup, so this is consolidation in a downtrend. It's what classical technicians would call a bear flag, but to us it's just bearish consolidation in a downtrend. This star right here, we use the term the tail, kind of from a poker analogy. It's like, aha, you've now shown your hands, and I have my high probability setup right now. This bullish gap should have moved higher into this void. Instead, it got smacked with selling, closed with a bearish range expansion bar. We have a bearish inside bar. That's what we call a bear 1, 2, 3 continuation. And we gave this as, there's technical setup there, shorted the stock under the low of those 2 bars, and we made another nice 4-day swing trade just going into trail mode. A couple others here. We love buying options when the options are liquid because we have the benefit of limited risk, of leverage, and even if we're stopped out, we lose less than had we been trading the underlying stock or ETF. So all these stars are tells in this particular example. They were attempts to break out that failed. Notice again the declining 20 and 50 period moving average. Here is a closing breakdown. You could have actually shorted under that with a stop under the high. Bearish consolidation in the bottom 50% of this bar. That's what we call bearish price action. We have the price void, look to the left. This topping tail again, range expansion, closing breakdown under these prior 4 bars. That was our green light to short this stock. And in this particular case, we bought what's called a bear put debit spread, where we buy one in the money put. We sell an out of the money put against it to lower the cost basis of that long put. And notice by doing that, look at this, in one day, this next day, we made 35% return on that put debit spread. And then we just also went into trail mode, made a cool 42% in 3 days. Etsy, you can see the tells here again, attempts to break out. You can see the declining 20 and 50. We have a concept called railroad tracks. And when you have parallel declining railroad tracks like this in a bearish downtrend, I have here in the heading, TT means topping tails, GBI, green bars ignored, shallow retracements, 20 below the 50 railroad track. Those are characteristics of bearish downtrends. So we teach the tools of how to profit in bearish downtrends using our particular setups, things that I'm talking about. So here, green bars ignored. This is a bear 180 reversal, another green bar ignored. We shorted under the low of this red bar, price void. Very simple, easy to manage in this case. 44% return in 4 days. One more here. This is what we call a sell setup. Again, you can see the downtrend. I keep reminding you, remember what the semiconductors and the technology and broader market's doing. And these are weak stocks in downtrends, regardless of what the market's doing. Bear in mind that we profited tremendously and still have many open positions in those bullish sectors also. I'm just illustrating that there's many ways to profit in the markets because stocks and ETFs move up, down, or sideways. So why not profit on the ones going down with these high probability setups? This is what's called a sell setup in reversal at the declining 20 in a downtrend. That would have been a very suitable short under that bar right there, but I guess I didn't see it at the time, but I saw it here. So this is bearish price action, could not advance into this ugly red bar. So that's another attribute, as I discussed on the prior slide. Inability to retrace, green bars ignored, topping tails. We shorted under this by buying an in the money $15 put, breakdown daily, weekly, and we made a cool 46% in 4 days trail on that one. If you'd like to learn how to do this and get a plethora of stock and option trading ideas sent right to you in your Telegram with the detailed weekend reports, as I mentioned, go to mastertrader.com/advisory swing. We have a no-brainer $39 trial. Check it out for a month. As always, any questions, email Greg or me. Look forward to seeing you in the next trade review video.